Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again at the Forex market. So now we could see that a lot of interesting stuff is going on here, but everything just stands in a starting point, so in some initial stage. No particular patterns are materialized yet, so we're still watching what will happen, but currently already have an option where to trade or just monitor the current performance, whether on the euro currency, dollar index, and on Great British pound, because in all these three assets we have something special. They in general similar, but they have a bit different price shape as forming, and just question of taste, what you like more. So on the euro currency, we finally is getting some bounce up, and today one of the things that we need to control, this is of course the performance around MACD predictor. So maybe not today, and maybe not on Friday, but on Monday, keep watching for possible bearish grabber, because as we said, the thrust is really great to the downside. It would be nice to get brand bottom, but it also might be the double repo. For instance, if market will form minor grabber here, it suggests taking out of these lows, which could mean some kind of this minor double top here, as usually happens on the double repo pattern. This is the first moment to watch for. On the intraday charts, if you take a look, their situation looks like on the Great British pound that we considered yesterday. So on the 4 time frame chart, we were getting upward breakout of the channel, but the tendency, as you can see, is not broken totally yet, because we do not have yet the reversal swing. The downside tendency of the low lows and low highs are still valid. Yes, we have out of the range, but this is not the new top. Only when the market will move above this area, somewhere to the 180, that could mean something. And from that standpoint of view, if you take a look at the hourly chart, here actually two patterns exist. So there is kind of the nested doll. So first one, you could consider this one. It's kind of the hand and shoulders. But this is mostly for short-term trading. If you trade on the intraday charts, you could see it because it's not perfect in shape. Shoulder seems relatively small, although market is showing some harmony here. I would prefer to consider larger pattern by the two reasons. First of all, it keeps correct ratio to the head, which is 1618, and it's typical for the hand shoulders. Second, if we're trying to deal with a daily chart, reversal pattern on the hourly chart should not be small. It should be more or less extended. So we can't use, say, bullish engulfing pattern on the hourly chart and suggest that this is the signal for taking position on the daily time frame. This is the logic. So they should be consistent. What we have on the hourly chart should be somewhere nearer to scale what we're trying to trade on the daily chart. So, and the reversal here in application to the daily chart also should be more or less extended. That's why here for trading on the daily time frame, I would prefer to get this type of pattern. But as you can see, they are not mutually exclusive. So mostly this minor pattern is a part of the head. And if you take position here, you will be just taking the part in some upward direction while the head is still forming. But as I said, this is a smaller time scale, this is intraday, and because you will have to make the decision on position closing somewhere around neckline. If you will not do this, you could get the opposite action back to the points where you have taken the position. So that's why, as you understand, this is a much faster trade and a shorter time frame. That's what we have on the euro currency. Correspondingly, on the Great British pound, on the hourly chart, we have very similar shape. It's a bit different, but it's also hand and shoulders. And yesterday we already talked about this. So if you would like to trade it, so here is somewhere it's time to consider possible position taking or something. Somewhere in the range between the 29.45 slows of the left shoulder and somewhere in the current area. You could make different suggestions on the shape of the shoulder here. Currently it's difficult to say. It might be kind of the A, B, C, D, right? Minor butterfly here might be is formed as well, but at the same time it might be very small garter steeple to buy here in this point. Difference are not really small. This is mostly are not really significant. This is tactical question. So whether you pay attention to such minor details or not when the position taken, well, this is a bit personal. So, but in general, that's also the pattern that you keep an eye on. Finally, if you take a look at the dollar index, it's also something interesting because this is the only, let's call it Forex market where we have daily bearish engulfing pattern on top. So we have direct daily pattern on the dollar index. This is another reason to why you could think about different assets for trading. So it will be other EUR if you like more the shape on the intraday charts. Maybe it will be dollar index because here we have engulfing pattern. You could try to deal with the engulfing here because it's already confirmed and stands in place, or you could choose the Great British pound. So, but all of them have approximately the same direction. But as you could see, shape on the intraday charts is a bit different, and that's actually what we could consider. So, as a bottom line, if you choose dollar index, you could wait with the minor retracement that actually already stands for position taken. Your stop will be above this area. If you're choosing Great British pound, your pattern is already stands in place, and you have to make the decision particular where you will take position with this shoulder, inside of the shoulder. On the euro currency, you need to decide on what the patterns you will be watching for. Either you will be waiting for this big pattern, or you will start dealing right from this smaller pattern and correspondingly make the action. The only thing that's actually common to all of this stuff is just, guys, actually risk of this trade still exists because the major fundamental tendency is not changed. Yes, market is trying to show some pullback, but how reliable this pullback will be, it's very difficult to say because, as you understand, when the strong fundamental factor stands in place, it easily could turn back any initiative to show something different, right? So that increases in general the risks of taking position against the major tendency. And that's the reason why we every time call to wait for patterns. It's really simplify the overall trading process, save a lot of money because you could calculate directly where you're placing the stop and you get the optimal price combination, price shape for taking position and placing the stop. So, and finally, pattern at least give you at least some background because you have the bullish pattern that at least give you some reliability, some insurance or something this kind that increasing the probability that action will be with the position that you intend to take. So that and towards what we have, let's keep watching and see how it will turn.